Qualcomm Stock, ticker symbol QCOM. This stock is flat year to date, underperforming the overall market big time. On the 2nd of August, Qualcomm presented quarter results where they beat on EPS but missed on revenue. For the upcoming earnings, analysts think they will beat the estimates. People love Qualcomm stock because of multiple reasons, one of them being the dividend, and I understand why, with dividend yield at 2.96% and a great dividend growth track record. So could this be the perfect moment to buy Qualcomm stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Qualcomm do? Qualcomm is a multinational corporation known for designing and manufacturing semiconductors and wireless telecommunications products. And if we check the most recent earnings report, we see that revenue was reported at 8.4 billion, down 23% year over year. EPS was reported at $1.87, down 37% year over year. So this is something that worries me a bit. The only good part was that Qualcomm already expected this to happen, and the current results are within the guidance range. For the fourth quarter, it is again the revenue that is slowing down. The good part is that margins are expected to grow a little bit. And when we check the two biggest segments, QCT and QTL, we see that both segments are down big time in revenue and EBD. If we check the sub-segments within QCT, we see that handsets are down 25%, which is a big number. It is also the biggest sub-segment. Automotive is up 13%, which is very nice. Internet of Things is also down big time. Overall, these earnings weren't the best obviously, and worries me a bit in terms of future growth. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free, to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Qualcomm is a 120 billion market cap company. PE ratio is at almost 14, which could indicate that they are overvalued right now. Later in this video I will show you my 3 price targets for Qualcomm, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 38 billion, and in this graph we see that revenue went up in the long run. But it is not always steady and consistent. Most recently it is decreasing quite heavily. Over a longer period of time margins are kinda steady, but again most recently it is starting to come down a bit. EPS is following the same pattern as the margins and revenue, nothing really special to be honest. Analysts expect 2023 to be a tough year for Qualcomm in terms of EPS. After that, it is double-digit growth that is expected. For the revenue, it is a pretty similar story, but with slightly lower numbers. It is expected to see mid-single-digit growth in the coming years. And to be honest, this is exactly how I see the future of Qualcomm. Short term there are some growth problems, but long term they will be fine. Return on assets is sitting at 13%, which is a great number. Return on equity looks also very good, and the most important number, return on invested capital, is sitting at 21%, which is also a great number. But it is lower versus the 5-year average, which is something that I don't like. Current ratio is at 2.4, which is looking pretty good. There is nothing really special to mention here. Right now Qualcomm has 15 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Qualcomm has 8.6 billion in total cash, so they can't pay down a big chunk of their total debt. This is something that I really like. But still, it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down in the long run, but in general I would say it's going up. Shares outstanding are decreasing, which is a good thing. When shares outstanding are decreasing, it increases your ownership in the company. increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.96%, which is a decent number. Annual payout is at $3.2 and payout ratio is at 32%. I prefer 50% or lower, so right now they have 68% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 5%, which is a decent number, and they increased the dividends for 19 years in a row, which is also very nice. And if you take a look at these numbers, the dividends paid since 2012, you see that Qualcomm did increase the dividends at a decent rate. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time, payout ratio is decreasing, which is a good thing. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at similar growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Qualcomm stock with the overall market, in this case the S&P 500. Next to that I added two similar companies, Intel and Texas Instruments. On the 5-year chart we see that Qualcomm beats the S&P 500. In total, QCOM returned 66% including dividends versus the S&P 500 sitting at 60%. Intel has the lowest return and Texas Instruments also beats the S&P 500. On the 1-year chart it looks pretty different with the S&P 500 returning 16% including dividends versus Qualcomm returning minus 10% including dividends. Intel is really popping with 25%. On the 6-month chart it is a pretty similar story with the S&P 500 beating Qualcomm again with a decent amount, and Intel is having the highest return. On the 1-month chart it is again Intel that beats the others in this list. So bottom line, Qualcomm beats the S&P 500 in the long run, but most recently it is lagging behind. So could this be the perfect time to buy Qualcomm stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on the historical performance, their own outlook, but also because of the analysts. For the profit margin I'm filling in 22, 23 and 24%. And for the free cash flow margin I'm putting in slightly lower numbers. For the PE ratio and the price to free cash flow I'm putting in 14, 15 and 16. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now Qualcomm stock is at $107. I hit analyze and we see a few green numbers. We have a low price target of $75 to $82. We have a mid price target of $94 to $102 and we have a high price target of $117 to $128. To me, the mid to high price target is the most justified here, indicating that this stock could be undervalued according to these numbers. My final conclusion on this stock is that I do love the company. I'm currently holding shares of Qualcomm and with reason. Most fundamentals look great and long term they will be fine in my opinion in terms of revenue growth. But I have to admit I would love to see better results in the short term. From a dividend point of view things also look really good with a great dividend track record. From a value point of view I do think Qualcomm could still be undervalued, but it is key to analyze them after every quarterly report, because things can change drastically for this company. For now I'm buying not any more new shares. It is already one of my top 5 positions and I don't want to increase it for now. First I want to see the next earnings to come up with a plan. In the meantime I'm collecting the dividends and whenever the stock drops significantly I might consider buying more shares because they are still undervalued right now in my opinion. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.